He's the biggest name in Bitcoin since Satoshi Nakamoto. After a corporate near-death experience in the dot-com bubble, Michael Saylor brought his company back from the brink and turned it into a Wall Street spectacle for the second time using Bitcoin. Oh, and by the way, he's sitting on more than 530,000 BTC. So it's no wonder that Saylor's liquidation price are now the three most feared words in crypto. But could he ever be forced to sell his BTC? And if so, why? And while we're at it, what does his company even do? Stay tuned to find out. Michael Saylor and his company have been on one hell of a ride. In 1989, Saylor and two of his MIT classmates co-founded MicroStrategy, a vendor of humdrum enterprise software that was turbocharged by his charismatic salesmanship. He described MicroStrategy not as an internet company, but as an intelligence company that was on a, quote, crusade to purge ignorance from the planet. He told The New Yorker, quote, "If I don't succeed, it's an abomination in the eyes of God. I think my software is going to be so ubiquitous, so essential, that if it stops working, there will be riots. I mean that literally. I mean that people will die this year because they didn't buy my software." Luckily, people did buy his software, and investors loved it. MicroStrategy's share price doubled within hours of its IPO in 1998. At its peak, MicroStrategy was valued at $50 billion, and investors were falling over themselves to hear what company insiders called Saylor's, quote, "come to Jesus speech."
What did you say?
The company's phenomenal financial statements sent MSTR to the moon by late 1999, enabling Saylor and other insiders to sell $82 million worth of shares. By March 11, 2000, MSTR was trading at $333 per share, and Saylor's net worth had ballooned to $13.6 billion. But as the numbers coming out of MicroStrategy reached ever dizzier heights, they started attracting questions from auditors about the company's books. When PwC discovered accounting errors consistently falling in the company's favor, MicroStrategy was forced to issue an accounting restatement with devastating results. Hate mail, death threats, and class action lawsuits poured into Saylor's office. The price of MSTR plunged by 62%. And then the company got a call from the SEC, who Saylor feared could, quote, vaporize us. The agency announced an investigation, and MicroStrategy hurriedly admitted that it had overstated revenue for the previous 3 years, not just 2. In the end, MicroStrategy wasn't quite vaporized, but it came close. 1,600 workers were laid off, and MSTR's stock fell from a high of 333 in 2000 to just 42 cents in 2001. The company spent the next 2 decades in purgatory, where its market cap ranged between $200 million and $2 billion. In the early 2010s, Saylor tweeted occasional musings about Bitcoin, like, quote, "Bitcoin's days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling." But in 2020, the pandemic changed Saylor's view of fiat currency and Bitcoin completely. In a July 2020 press release, MicroStrategy announced a plan to address macro risk factors stemming from the pandemic, quantitative easing, and global political and economic uncertainty, all of which threatened to devalue its dollar-heavy corporate treasury holdings. To do this, the company would invest $250 million in, quote, alternative investments or assets, which may include stocks, bonds, commodities such as gold, digital assets such as Bitcoin, or other asset types. We think the decision to allocate entirely to Bitcoin had probably been made by that point already, because just days later, Saylor tweeted that MicroStrategy had made Bitcoin its primary reserve asset. He had spent the whole $250 million to buy 21,454 BTC at an average price of $11,655, making MicroStrategy the first publicly traded company to hold Bitcoin on its balance sheet. And things escalated very quickly from here. A second massive purchase of $175 million in mid-September brought MicroStrategy's holdings to 38,250 BTC and confirmed beyond a shadow of doubt that Saylor had been fatally orange-pilled. Quite suddenly, Michael Saylor became, arguably, the biggest name in Bitcoin since Satoshi Nakamoto. Like so many of us, he had become convinced that Bitcoin is a superior form of money and monetary system to anything that came before it. All of the charisma and conviction that Saylor had channeled into MicroStrategy in the 90s now reappeared as a quasi-religious faith in Bitcoin. From this point onwards, he preached the orange gospel like his life depended on it. On the 18th of September, he tweeted, quote, "Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy." Alrighty then. Well, to explain what happened next, it's easiest to just look at the BTC USD chart. Over the next 208 days, BTC rallied by 500%, turning Saylor into a genius on top of the world once again. Look, I'm not saying his tweets manifested a bull market, but they certainly didn't hurt. By the end of 2020, MicroStrategy had spent a total of $1.125 billion to buy 70,470 BTC, which looks like an absolute steal right now. The company's end-of-year market cap more than doubled from $1.4 billion in 2019 to $3.6 billion in 2020. A year later, it was $6.1 billion. 2022 was something of a snag in the road for crypto, and MicroStrategy took a plunge back down to $1.6 billion, before ripping all the way higher to $10.5 billion in 2023 and $80.8 billion in 2024. Fast forward to 2025, and MicroStrategy is barely recognizable. As a vendor of business intelligence software, it has a market share of less than 1%, and despite counting some huge companies among its customers, it's not really profitable. It's actually become a liability, losing MicroStrategy almost $20 million in Q4 2024. Thank goodness for Bitcoin. In recognition of the company's transformation, MicroStrategy rebranded to Strategy in February 2025. And this looks like a victory lap for Michael Saylor, who defied naysayers in MicroStrategy's heyday to pursue a cash-guzzling side project called Strategy.com, which was the centerpiece of his self-proclaimed crusade to purge ignorance from the planet. Anyway, the company now holds well over 530,000 BTC, which is more than 2.5% of Bitcoin's entire circulating supply. It's notoriously price elastic, having bought more and more BTC all the way up to the top. Until late 2023, MicroStrategy was accumulating at a relatively steady pace, but as the price of BTC took off at the end of the year, so did Saylor's buys. It took MicroStrategy almost 3 years to go from 100,000 BTC to 200,000 BTC, but only 1 year to go from 200,000 to more than 500,000. As BTC raced past $100,000 late last year, the frequency and volume of MicroStrategy's buys increased tremendously. This practice was much to our collective delight and amusement, but difficult to understand. Most of us mere mortals are used to the strategy of trying to buy low and sell high, not buy high and never sell. But Saylor buys BTC like the price is racing away from him and is never going to slow down. For example, between November 10th, 2024 and February 23rd, 2025, Strategy spent $21.2 billion buying Bitcoin at an average price of $96,458. For most of this period, markets were euphoric, meaning that anyone with enough patience would be rewarded by being able to buy at a lower price. And lo and behold, Bitcoin retraced to below 80K not long after. Alarm!
We regret to announce that the Bro Crypto podcast is sponsored by the Coin Bureau Deals page. This is the place where you can find the very best deals and promos in the crypto space. From massive trading fee discounts to insane sign-up bonuses on some of the best crypto exchanges. Check out the Coin Bureau Deals page today.
So, why does Saylor chase green candles like that? Well, strategy believers explain that this is a feature and not a bug. To make sense of this, we'll need to know how the strategy works. Now, Strategy's strategy has multiple prongs, the first of which is raising money to buy BTC by selling equity in the company. Every dollar from every share sold is used to buy BTC at its market price. MSTR stock trades at a persistent premium to its net asset value, and for most of the last 2 years, this premium has hovered around the 2 times range. Put simply, this means that its market cap is around twice the value of its BTC holdings. Strategy issues new shares using the at-the-market or ATM offering model, which allows it to drip-feed new shares into the market at its own convenience. This enables Strategy to unload shares at the highest possible price and premium, so selling MSTR for twice or even 3 times book value during periods of market euphoria. As Saylor likes to put it, this is tantamount to selling $1 for $2, or conversely, buying BTC at 50% off. Because MSTR is a levered bet on BTC, it's not only the price, but also the premium that increases when BTC rallies. And this is why buying BTC at elevated prices at peak euphoria is no mistake and no problem for Strategy. Quite the opposite. Thanks to the persistent MSTR premium, Strategy is able to increase the amount of BTC held per share over time. And this can be understood as a kind of BTC yield that accrues to shareholders, a key property of MSTR that reinforces this premium. Last year, Strategy was able to generate a 74% increase in the amount of Bitcoin held per share last year, equivalent to 140,630 BTC. This increase in BTC per share more than offsets the dilutionary effect of issuing new shares. Another prong of the strategy is borrowing money through convertible bond offerings. And if you're not familiar, bonds are a form of debt, essentially an IOU, issued by governments and businesses like Strategy. And this is just another way for investors to give Saylor money to buy BTC. Now, convertible bonds are bonds that holders can choose to convert into stock under certain conditions, namely if and when the price of MSTR increases by a certain amount from the point of sale. In other words, the bond contains an embedded stock option. Amazingly, Strategy is able to issue these bonds at a bonkers 0% interest rate, meaning that investors are lending Strategy money for free. And this sounds like a terrible idea, but so far there has been ample demand because A, investors are persuaded by Strategy's flywheel, and B, MSTR is highly volatile, and the stock option embedded in the convertible bond is made more attractive by this volatility because it creates arbitrage opportunities. Most recently, Strategy has started selling a pair of perpetual yield-bearing securities called STRK and STRF, with dividends at 8% and 10% respectively. STRK also comes with an option to convert to MSTR at a rate of 1 to 10 if the latter reaches $1,000. All put together, perhaps you can see why Strategy has become a Wall Street obsession for its clever financial engineering. Saylor describes how Strategy, quote, creates more pressure to drive up the price of Bitcoin, which drives up the price of MSTR, which drives up the leverage of MSTR, which drives up the value of the options, which drives up the demand for the equity, which drives up the demand and the value of the convertible bonds, which drives up the price of and the demand for STRK and STRF. The mind boggles. Like the crypto market itself, the whole thing depends on the price of BTC going up and to the right forever. Strategy's strategy also depends on the continued premium of its stock to the value of its BTC it holds. As the BTC share per yield has been increasing almost non-stop, the premium is unlikely to go away anytime soon. And frankly, none of us would be here if we didn't think Bitcoin was bound to appreciate for the foreseeable future. Meanwhile, volatility is another key component that underpins Strategy's ability to borrow money for free. It has cooled off somewhat in recent weeks, and this is reflected in slightly more favorable conditions in Strategy's convertible bond offerings. Namely, the conversion premium has fallen from 55% to 30%. Though the 0% interest rate, however, that remains unchanged. As long as BTC goes up, volatility remains relatively high, and the MSTR premium persists, this system could work indefinitely. But it is a levered system, and as we all know, where there is leverage, there is liquidation risk, right? And this is why the words Saylor's liquidation price are so scary. It sounds like a black swan waiting to happen. If Strategy was hit by some kind of financial shock and its 530,000 or so BTC were liquidated, it would be an Armageddon for the crypto market. Well, the good news is that liquidation doesn't happen by magic. It's written into debt contracts, and Strategy does not have any outstanding debt contract with formal liquidation triggers. Likewise, the company is not vulnerable to margin calls because its current debt lacks covenants tied to the price of BTC. All of Strategy's $9.26 billion in convertible bonds are unsecured, meaning lenders cannot seize Bitcoin as collateral. Repayment relies on cash or equity conversions, not asset liquidation. So the Saylor liquidation price is really a myth, or at least on paper. Recently, Strategy reported in an SEC risk disclosure statement that there are several reasons why it could have to sell its BTC this year. If it wasn't clear already, the entire game depends on them never selling BTC, which Saylor constantly reminds us he will never, ever do under any circumstances. As he puts it, quote, "You do not sell your Bitcoin. The end game is to acquire more BTC. Whoever gets the most BTC wins. There is no other end game. And sell your kidney if you must, but keep the Bitcoin." You can see why it shocked so many to see the company saying it would sell BTC, but as more informed observers pointed out, Strategy has been making this same disclosure to the SEC for years. It's not news at all. And if this risk disclosure wasn't revealing some unknown risk in the past, why would it do so now? Strategy's financial position has strengthened considerably in the past few years. The company has around 4 times the net capital it had at the beginning of 2023. The biggest risk is that BTC collapses so far that Strategy's assets are worth less than its liabilities. But for this to happen, BTC would need to fall to around $15,500. This price level is now a very tall order from the perspective of both technical and fundamental analysis. If BTC were to fall by, say, 50% or 60%, it's very hard to see how demand would not overpower supply. The previous bear market bottom of November 2022 was coincidentally around 15K, and much has changed since then. Bitcoin's remarkable recovery to above $100,000 has shown the world yet again that it is not going anywhere. Bitcoin's volatility is decreasing, while its recognition as a unique asset of strategic value to institutions and governments alike has increased dramatically since November 2022. Who among these large whales would not step in to buy as much BTC as possible at 40K, 30K, 20K? To suggest that market participants would just watch idly as BTC fell below $16,000 once again is highly implausible. So, our verdict is that the latest Saylor scare is pure FUD. Now, will Strategy's financial engineering be the death of it one day? Maybe. But given the current structure and risk factors involved, we can't see a path to Strategy being forced to sell its BTC. For now, Michael Saylor and his cyber hornets march on. So there's one crisis averted, but if you're hungry for more drama, why not check out our recent video on the digital euro CBDC? That's right over here. And if you're not subscribed to the channel yet, you can do that right over here. This is me, Nick, signing off. Thank you very much for watching, and I'll see you again soon.